From tax haven to private club. That's what one media outlet is saying about a new law approved in Andorra that will significantly change the rules for those looking to move there. In this video, I'm going to explain all the changes mentioned in this new law as well as give my thoughts on it. Let's get right into it. All right, so a bit of background on Andorra before we get started. So it's a micro-state in the Pyrenees region, essentially sitting between France and Spain. It's well known and popular for its very favorable tax regime. So you have a bracket system essentially starting at 0%, which goes up to 5% and then has a top rate of 10% on personal income tax. And in recent years, the territory has become especially popular among Spanish entrepreneurs and particularly streamers and YouTubers who have relocated there for a more optimal tax structure for their activities. And many of those who've done that already have been able to do so with relative ease, we could say, which is now changing, as I alluded to in the intro, thanks to a number of new rules that are coming in that will primarily impact aspiring new residents more so than existing residents. But we're going to get right into the details of what is changing right now. And so this new law, Omnibus 2 as it's been called, is all to do with promoting sustainable integration and growth of new residents in Andorra and of Andorra as a country and economy in general. And so the first major change relates to the deposit required if a new resident is arriving in Andorra and is going down the entrepreneur pathway or the passive residency pathways. And so going down one of these paths, the requirement is to deposit 50,000 euros in a bank account of the Autoritat Financera Andorrana with an additional 12,000 euros per dependent. Now, 50,000 euros, essentially, you put it in a bank account, it would stay there, there'd be no interest generated on it. But if one day you decide to leave Andorra, you would recover that 50,000 euro deposit, essentially. Now, the major change happening here is that if you were to leave Andorra under this new law, after making that 50,000 euro deposit, you would not expect to get your 50,000 euros back, essentially becoming a one-time non-refundable deposit under this new law. So obviously quite a considerable amount of money that is no longer recoverable on leaving Andorra were you to become a resident in the country. But it's not just that. So there are changes to each of those residency routes as well. So first we'll talk about what are the changes for self-employed people looking to come to Andorra. So this new law lays out a requirement of a 50,000 euro investment in Andorran assets or entities, essentially, establishing a company and business activity in Andorra. And importantly as well, showing that that business, that company has an effective management and real economic activity within Andorra. So it's not just like you could set up the company business in Andorra and, run it from somewhere else in the world for tax purposes, essentially. No, the authorities are now looking for proper substance in Andorra. There is an exemption, though, for high-value tech, innovative businesses, and digital economy for that requirement. Now, important distinction that we should note as well here is that there is a separate existing requirement of minimum capital contribution if you are wanting to create an entity in Andorra. So if you want to create a limited company, an SAL in Andorra, essentially, the minimum capital requirement would be 3,000 euros. Or if you want to create a public company, an SA, Sociedad Anónima, the minimum contribution would be 60,000 euros. Now, this is essentially a separate minimum contribution for capital. But if we put that alongside this new legislation of a minimum 50k investment, what that essentially means is, opening a company in Andorra with the minimum 3k contribution for a limited company, for example, that wouldn't meet the requirements to gain access to residency via the entrepreneur route. In entrepreneur, it would need to be a minimum 50,000 euro capital contribution to whatever form of company that you're setting up. And so it's important not to confuse the minimum capital contribution requirement to create an entity with what is the minimum investment required to obtain residency in Andorra down the entrepreneurship route. And now if we move to talk about the changes to the passive residency and investor residency routes, the major change you have here is with regards to the minimum investment required to obtain the passive residency in Andorra. So previously you had a minimum threshold of 600,000 euros per individual property that could open up your eligibility to apply for the passive residency in Andorra. That is now increasing. Now, two sources, Expansión being one of them, put that at 800,000 euros. So it's a 200,000 euro increase. But then a separate source, La Veillura, is saying that it's €1 million minimum investment. In any case, that minimum investment has now increased for the passive residency route. There is also another investment option available for the passive residency route, which is a €400,000 investment in the Andorran property fund. Think of this as something similar to the investment funds that Portugal and Hungary have for their golden visas respectively, which I've talked about with experts on this channel as well. So higher minimum investment requirements essentially here for investors looking to obtain passive residency in Andorra. And there's a couple of other points that I think are worth noting as well in this video as part of this new Omnibus law that are of particular interest. One of them being that time spent outside of Andorra is now regulated essentially by administrative taxes, tasas administrativas, as it reads in the article. It means that as an Andorran resident, time spent outside the country is now being watched and regulated essentially, depending on what the purpose of that time spent out the country is for. And then there's also some additional rules regarding temporary employees who are being sent to Andorra for work regarding their maximum work contract, a maximum extension of 12 months, it says, and making sure they have the proper permits and health insurance covering them during their time in Andorra. So some notable changes there versus how things were before. Let me give you my take on how I see this in terms of what it means for Andorra, what it means for people moving to Andorra. The first thing I'm going to say is I don't think this will put anybody off moving to Andorra necessarily, because I don't believe that everybody who moves there does so on a particularly short-term basis. Like if you look at the YouTubers that have moved to Andorra in recent years, some of them have been there probably 4 or 5 years. It doesn't seem like they have any intentions of necessarily moving. So, Andorra is not necessarily a short-term play for everyone. And even though you've got this concept of a non-recoverable deposit now, if you're staying in Andorra for any length of time, over multiple years, one could argue that, if your business is generating enough income, if you have enough money coming in, when you look at the tax saving versus France or Spain, for example, one could argue that even with that €50,000 being non-refundable, there's still a saving economically compared to the tax burden that person might have in France or in Spain. What I do think though is that it's no longer the easy option, and it's no longer a short-term option either, moving to Andorra under this new set of rules essentially. I think that whilst it is a real option, I think it's going to require a bit more long-term planning and people giving it a bit more thought about, is Andorra really the place they want to be, given the fact that you may be effectively paying €50,000 to live there, in addition to potentially having some administrative fees or taxes for time you spend outside the country. But in spite of all of that, Andorra is a really good place to be. I had the chance to visit in 2024 and I really liked it. Fantastic nature, very quiet and peaceful, clean and safe. And whilst if you're staying there long term, there's probably not a great deal to do. Big cities in France and Spain and the beach are only about a 2 or 3 hour drive away. So you're not totally stuck in the middle of nowhere with nothing to do and nowhere to go, essentially. As I said in the intro as well, Expansión, in its article title, it said that Andorra was moving to a private club. I don't agree with this. I think a place like Monaco is more something that fits the definition of a private club due to its very particular criteria that it has for someone to be able to seek residency there. Sure, it might reduce the number of people moving to Andorra, and on the property side of things, maybe property investors, after doing their analysis or their thoughts, they decide, okay, property at Andorra is not the best value for my money, maybe I look somewhere else. But I think particularly for the entrepreneurs, the autonomos, they don't necessarily have to be super high earners for it to make financial sense for them to go to Andorra. If you take out like rent or the cost of buying a property, then Andorra is much more affordable compared to the likes of Monaco, compared to the likes of Switzerland, and also has much lower VAT than its neighbours France and Spain. What this does come back to, of course, though, is a key lesson that's often talked about in this space of like relocating and setting up a global lifestyle, which is, don't wait until it's too late. This isn't the first time that Andorra's made changes. That €50,000, it used to be €20,000. And as we talked about, that €50,000, you were able to get it back when you left Andorra. And now it's not something you can expect to recover when you leave in Andorra. So things change all the time, especially as places become more popular, not just Andorra. There's countless other examples where you've seen things like this, like Portugal, like the UAE. As places become more popular, the requirements increase. And whilst For some people, it will completely shut the door. For others, it will make it, harder to get through the door, or it may not be a door that they wish to explore anymore because of that. So up to this point, we've only talked about Andorra, but I think there's a really interesting point that I came across by coincidence as I was discovering this, that I think has the potential to be even more impactful, is that Spain's tax authorities, who have had streamers, YouTubers on their radar for a long time now, are now studying ways to keep someone as a Spanish tax resident if they see that their activity is linked to the Spanish market and they may consider that their center of economic interests, essentially. And as I say, I came across this article talking about this. I couldn't find sources for what was being said, but it's allegedly being discussed and has been raised by the tax office and tax inspectors. And as I say, this, I think, has the potential to be quite disruptive and impactful, particularly given the market that there is for Spanish entrepreneurs, YouTubers, streamers that move to Andorra. That makes up a big percentage of people moving to Andorra because of the tax situation in Spain. And Spain already has essentially a stealth exit tax in place for situations like this. If you are, for example, a Spanish tax resident or Spanish citizen moving from Spain to a country that it considers a non-cooperative territory, Spain can essentially consider you a Spanish tax resident for up to 5 years after you've left. And in the case of Gibraltar, for example, if you move directly from Spain as a Spanish citizen to Gibraltar, they can essentially consider you a tax resident for life in Spain. So could having a business or an activity tied closely to the Spanish market make it such that your center of vital interests is in Spain? And if so, could the Spanish tax authorities then go and pursue you as a Spanish tax resident as a result? I guess we'll have to wait and see. But this was a very interesting discovery and certainly one to keep an eye on. Alright guys, there you go. I hope you found this video interesting and informative. Leave a comment and let me know if you've got any thoughts on this new law in Andorra. Would it put you off moving there? And also I'd be interested to hear what you guys think about what is allegedly being discussed in the Spanish tax authority as well. And if you want to see more videos related to this, such as when I visited Andorra, or if you want to find out more about how taxation works in Spain, then be sure to check out these two videos here. Till next time, I'll see you on the next one. And let's get this money.